There's this video on YouTube which was reporting since May 2005 that gold had way outperformed Berkshire Hathaway stock. Berkshire Hathaway is Warren Buffett's money. That was published in 2009, and that was obviously as we had the big financial crash and so on. So that was just a 4-year view of that. And I was quite surprised because I know Warren Buffett basically says, look, if you're going to buy gold, it's just a metal. It doesn't produce anything. It's not an asset. It's purely speculating that when you buy it, you think someone else is going to want to pay more for it at a later point. So it's pure speculation as far as Warren Buffett's concerned. But the 2005 to 2009, was that the case? Well, if we go from 2005, we were talking May, so $87,000 per Berkshire Hathaway. Actually, we don't need to go through these figures because that's what he was pointing out from 2009. So there was the crash. So, you know, there had been this dip in Berkshire Hathaway. But look at the overall long-term performance. If we go back to the 1st of June 1990, 7,100 per share is the price on Berkshire Hathaway. Price today is $309,265 US. That's a 4,400% growth, a 44-fold return in 30 years. How does that compare with gold? Well, I'm on the gold.co.uk charts here, and if we go back to June 2001, £202 per ounce of gold, and we go to today's price, which is 1,042. That is a 515% growth. So Berkshire Hathaway have outperformed gold almost tenfold. And this comes back again. Warren Buffett's advice to investors is invest in something that is an asset, something that's producing. You know, if you invest in stocks rather than in gold, you're investing in companies. Those companies are driven by directors and company employees that want to make a profit. They're producing something, they're selling something, and they will reinvest that profit. So you get this compounding. It's gold, as Warren Buffett points out, you can sit there, you have it in a drawer, have it at home, you can look at it. It doesn't do anything. It's based purely on the speculation that it might be worth more to someone else, or rather someone else is willing to pay more for it after you bought it, but it doesn't actually do anything. You could have gold and you could have it for 1,000 years and you come back to it and it's still the same kilogram bar of gold or whatever. Whereas if you've invested in businesses that are there to grow, that are there to produce, that are there as assets, that's a far more powerful thing to do. If that makes sense to you and you'd like some more details, I'm actually an angel investor. So Warren Buffett again has said on this in the past, you know, he can't invest in small companies. It's not worth his time and effort. He's got so much money. He can't, you know, he needs to invest billions at a time. So he can't invest in small companies, but he knows that there are a lot of good small companies. So for a smaller investor, that's a great way to go. So I'm an angel investor. If you'd like more details on that, there's a link in the description. If that makes sense, I'd love to have you in our business club. We'll give you all the details. Click the link in the description. But I hope you found this video useful. Like I said, I was quite surprised at this. In one sense, I wasn't surprised. It was a guy who runs a gold company, so understandably, he's going to say, we beat Berkshire Hathaway. It was on a very limited time scale, and overall, they haven't. Overall, you can't beat stocks, and Berkshire Hathaway, Warren Buffett has proven that. You get this short-term blip, so January 2008 down to March 2009. But again, just stick with it, and they're asset producing. Invest in businesses, invest in people, and you can compound your money. Thanks for watching.